You are again standing at 31st December 2014. The unadjusted balance of supplies account 3200, and the cost of supplies on hand is 1500. What they are trying to say, they say the balance right now is 3200, and balance on hand, which is the last balance, is 1500. So how much they consume, you need to find this part, right? And how much is this part?
1700.
Right? Here we go. Or you can say that at the start of the accounting year, supplies was 3200, right? They didn't purchase anything, so they didn't purchase during the year. But at the end, we have the balance 1500. It means 1700 must be used by the business during the year, right? So when we make our adjustment, so we need to find out, we need to charge the supplies account with the decrease. So supply account decrease, supply would be on the credit side, and expense gonna be on debit side. And which expense? Supplies expense. So let me just remove all the mess here. Here we go. Supply expense to supply. Now salary expense is 7,000 per day, Monday through Friday, right? And the business pay employees each Friday, right? Now this year, December 31st falls on Wednesday. So would we be able to pay the salary of Monday, Tuesday, Wednesday? No, we would pay on Friday, right? So till on Wednesday, how much salary is payable?
21,000.
Yes, well done. 7,000 multiplied by 3, 21,000. Right? So we are standing on Wednesday, 31st, and we need to close our accounts, close the accounting period. But salary going to be paid on Friday, right? So how much salary is due on us? Monday, Tuesday, Wednesday, 3 days, right? So what would be the entry? Expense occurred, salary is our expense. Expense occurred, but we didn't pay yet. When we didn't pay, we have to create liability. So that would be salary payable. So salary expense to salary payable. And now, your turn. Junpyo. On January 1st, 2014, when the business collected 15,000 rent, and that rent is in advance, it means which sector we need to target? Remember, so many of you guys, when they see that, okay, rent in advance, so they just say this is prepaid rent. It makes sense, it is prepaid rent. But remember, this is not prepaid rent. Why? Because the business is renting business. So for renting is their revenue, right? So this is not prepaid rent, this is their advanced, they received revenue in advance, which means unearned revenue or unearned rent revenue, right? So here on July 1st, 2014, when the business collected 15,000 rent in advance, it debited cash and credited unearned income. The tenant was paying for 1 year's rent. So rent gonna be 1 year rent gonna be 30th June 2015. But we are now on 31st of December. It means 6 months rent we can accumulate as our revenue. So we are entitled only for 6 months, not the 12 months. So half of this payment belongs to our revenue. So answer would be, and since we earned that one, so it means we need to decrease it. We need to decrease this unearned rent revenue. So when we decrease that one, previously it is credited, now it is debited. So unearned revenue to, you increase your sales, that would be unearned revenue to revenue. So answer would be unearned rent revenue to rent revenue. Everybody understand that? Junpyo, I thought it was...
It's half because it's July, right?
Yeah. No. It is because we are on 31st of December.
Right.
It started, this received the amount on July 1st, 2014. But they pay for whole year, for 12 months. So our accounting period expires on 31st December 2014. So, right, we are not going into future. We are here, present at 31st of December. Understand?
I just need a minute to think about it, but then I'll understand it. Why do we debit cash and credit unearned rent? Does that just mean like plus and minus?
This one? This one, right?
Yeah.
Okay, let me explain one more time. Okay, this is basically the journal entry that they did when on July 14 they received this collection against advance rent, right? So the entry would be when they receive the revenue in advance. So when you receive the revenue in advance, cash to unearned revenue, 15,000. So they just mentioned that we made this entry, right? And now they say that the rent was for whole year, and we are now at 31st December 2014. So from July 1st to December 31st, how many months passed? 6 months. So it means this 15,000, which they make this entry is not a revenue. Why? Because this is unearned. Unearned revenue is our liability, not the equity, right? Not the retained earning, okay? So this is not the part of revenue or sales. This is our liability because we didn't perform services. But since 6 months services we performed, right? And then we are entitled to receive the money according to 6 months of our service, because we are in renting business, renting businesses. So that's why entry would be half year's rent, and entry would be unearned revenue, rent revenue.
So, sir, I have a question.
Yes.
So on July 1st, 2014, they would have marked the whole revenue, the whole cash, I mean.
They received the cash, yes, the whole cash.
So in the debit, they have wrote 15,000 cash.
Yes.
And in debit, they had written unearned revenue.
Credit.
Oh,
Yes.
I mean.
50. This entry they made. Cash 15,000 to unearned revenue 15,000.
So they have already written this one in like.
Yes, on July.
Okay.
Right? And you are right now where? Because you are passing adjusting entry. Remember, adjusting entry is always at the end of the December. So they also mentioned. Even this one is also not mentioned. Then assume yourself you are in December 31st. Why? Because adjusting entries are always done at 4 stages. Number one, you record day-to-day journal entries, and then you post it into ledger. And then you make trial balance. We call this unadjusted trial balance or also trial balance. You are now at part 4, step 4, in which you are having adjustment. It means you are standing on the last day of our accounting period, right?
So it's a whole new category, right?
Yes, it's a whole new category, adjustment entries. If I go back where I started the adjustment entry, it is a whole category, whole new step after the trial balance, right? And now,
So can you say that? Sorry, could you go back for a second?
yes, sure.
So since it's 1500, but we only write 7,500, can we say that the other 7,000, 7,500 were like documented or journalized before December, right?
Before December 2015, not 14. This is the end of 2014.
Yes, yes, before December.
Yes. So then half of this 15,000 would be, and entitled to go on 2015 revenue, right?
Wait, but if it was from July 2014 to December 2014,
Yes. Then it is just
why is it unearned rent revenue?
because you receive the revenue in advance. You didn't receive the revenue on 31st. You received the revenue, the whole year revenue,
Mm-hmm.
whole year revenue in advance, right? So it
Mhm.
means you prepay, sorry, your clients prepaid you for the whole year, right?
Mhm.
So it means your whole year sales, they already booked.
Okay, so we still have half a year left.
Yes. So
Okay,
as
okay.
you are closing your business to find out your business performance through balance sheet, income statement, so you need to close down the books for the 2014. So how much you take out from this 15,000? Only 7,500 belongs to